organized question bank rather than a reading. The reason is that over here we have the different standards, and then under each standard we have 1, 2, or 3 questions related to that particular standard. So in reality, what we have is an organized question bank, and also since this is presented as a reading, the explanations that you will see are extremely detailed. So therefore, I feel that it is very useful to treat this reading like a question bank. And as you start going through this, I would strongly recommend that you go over your code and standards. So you need to know your standards very well before you start. This way, you can read a question or a case and then come up with the answer before looking at the solutions. And to help you, we recommend that you use the IFT study notes. The reason is that in the IFT study notes, we present the question, or what the CFA Institute calls the mini case, and then rather than giving the answer or the solution right after the question, we give the answers or the solutions at the end. The issue with the way the curriculum has presented this is that you read the question and then your answer is right there. So you see that A is the best option or B is the best option. So while you are thinking about the solution, you are biased by the fact that you can already see the solution. So in our notes, we make it easier for you by pushing the solutions to the end. This way you can think about what the right answer is and then read the solution. So that's how our notes will help you. The next question is, how does this video lecture help you? Now, here I would recommend that first of all, you do the questions on your own. And in that sense, you don't really need this video lecture. But let's say that you don't have much time, and let's say that you have a long commute. You perhaps might want to just listen to all the questions as you are driving or waiting. And that's where this particular quote-unquote lecture might be able to help you. You can listen to a question and then I'll pause so you can think about what the solution is, and then I will briefly describe the solution and how to arrive at the correct solution. So again, the recommendation is do this as a question bank, and you can then read the solutions. In our notes, the solutions are presented in a brief manner. If you have time, you can then look at the solutions in the curriculum where the solutions are presented in more detail. And if you have very little time, then you can simply listen to this video lecture. And through this lecture, I will go over all the questions or all the mini cases. So now, as a quick refresher, we have 7 standards. Of those 7 standards, the first one is professionalism. And under professionalism, we have 4 substandards. 1A is knowledge of the law, 1B is independence and objectivity, 1C is misrepresentation, and 1D is misconduct. You need to know these standards before you attempt the different cases. Under standard 1A, knowledge of the law, we have multiple questions. The first question is as follows. SBS Bank acts as a custody bank for a wide range of clients. It charges its clients an asset-based fee for the services it provides. According to the bank's client agreement, custody clients agree to reimburse the bank for out-of-pocket expenses for items paid by SBS, this is the bank, on their behalf. Most of these expenses are for messages sent via SWIFT, a secure messaging network used by banks and other financial institutions. While SBS charges a fixed rate for SWIFT messages, the rate is higher than the actual cost of providing this service. Mendrakan CFA, a vice president at SBS, notices this discrepancy and brings it to the attention of his supervisor. Mendrakan's supervisor tells him to reduce the SWIFT fee rate for new clients and to revisit the rate for existing clients when their contracts are renewed. To meet this obligation under the CFA Institute Code and Standards, Mandrakan should A. Implement the corrective procedures as directed by his supervisor. B. Implement the corrective procedures as directed by his supervisor, but report his objections to the bank's board of directors. And C. Refuse to participate in any client interactions using the fee schedule until the bank revises the SWIFT rate to reflect the actual cost of the service. So these are the three options. Think about which one is best. The best option actually is the third one. Refuse to participate in any client interactions using the fee schedule until the bank revises the SWIFT rate to reflect the actual cost of the service. The reason is that the bank is effectively lying to the clients, because in the agreement with the clients, the bank is saying that clients will reimburse the bank for out-of-pocket expenses, implying that the bank will pay for the SWIFT charges, and whatever the charge is will be then passed on to the clients who will pay for it. But the bank is charging a higher amount to the clients. So this is an issue because CFA Institute members and candidates must not knowingly participate in legal or ethical violations and should dissociate from such activity. In this case, SPS is misrepresenting its reimbursement expenses to its custody clients and overcharging them. So therefore, what Mandrakan should do is refuse to participate in any client interactions until this problem is fixed. The next case is also related to Standard 1A, knowledge of the law. Pelly is CEO of KIG, an investment advisor that is a wholly owned subsidiary of Kwame Bank. A long-time bank customer that Pelly knows personally recently opened an investment account at KIG with a stated investment objective of earning income. Over the next year, the client made a few investments, but a majority of activity in the account involved several hundred bank transactions to and from individuals and entities located in bank secrecy havens and countries identified by the government as at risk for money laundering activity. Given the client's long-standing relationship, Pelly assumes the transactions have a legitimate business purpose and accepts vague descriptions such as for services provided, consulting fees, and commissions. He also approves the daily anti-money laundering reports without further inquiry. So now the three possible options are: Pelly's actions are A, a violation of the CFA Institute Code and Standards, B, appropriate because Pelly is protecting the confidentiality of client information, and C, appropriate because Pelly can rely on the accounts clearing firm to report suspicious activity for the account. So think about this. The best answer is A, violation of the CFA Institute Code and Standards. And this is because the client clearly seems to be acting in a suspicious manner. And what Pelly should do is further investigate these transactions rather than just pass them and assume that they are okay just because he knows the client personally. So his behavior is problematic. It is a violation of the standards. The next case is also related to 1A, knowledge of the law. Mwangi works for a firm that sells insurance products. 3 of Mwangi's clients purchase one type of product, which is Class A, but they later changed their minds and asked to switch to another lower priced product. So this is class B. For this switch to happen, the law requires that her clients sign new sale and purchase documents for the class B product. When the class B documents are ready, Muwangi tries to reach her clients for their signatures but is unable to do so. Because of the missing signatures, Muwangi's manager threatens to cancel the exchange. To prevent this from happening, Muwangi signs the necessary documents on behalf of her clients. Now, the options are Muwangi's actions are A, a violation of the CFA Institute Code and Standards, B, acceptable because her clients had already given their permission for the exchange to be made, and C, acceptable if the clients gave Muwangi explicit permission to sign the documents on their behalf. Now, again, I want you to think about this. The key point in the case is that the law requires her clients sign new sale and purchase documents. This means that if Muwangi signs on behalf of the clients, whether the clients explicitly allow it or not, this is still a violation of the law. And since it is a violation of the law, therefore it is a violation of Standard 1A, knowledge of the law. The best answer, therefore, is A. Moving now to Standard 1B, independence and objectivity. Myers is a partner at Corboba, a hedge fund that focuses on ESG investments. To support upcoming public office elections, Myers wants to personally donate $10,000 to one of the candidates, De Freitas. Myers is a passionate climate advocate and supports De Freitas' backing of environmental policies to reduce air pollution and mitigate the effects of climate change. Myers believes his political contribution may also be beneficial for Corboba because De Freitas is running for a position that can influence which hedge funds receive investments from the state's pension plans. Myers' best course of action is to A, refrain from donating to De Freitas, B, donate to De Freitas because he is using personal funds in an amount that is insignificant relative to the size of the hedge fund, and C, donate to De Freitas because he will be supporting a candidate whose environmental policies align with his beliefs. So again, I want you to think about this. And this question is actually a little bit tricky because on the surface, it might seem that A, he is using his personal funds, so that's okay, and B, his views align with the views of this political person, and therefore it should be okay to donate. However, if you carefully read this standard, Standard 1B, independence and objectivity, this standard clearly says that doing anything that influences the independence and objectivity of someone else is problematic. And what we also learn in this mini case is that if Myers makes the donation, he is trying to influence the objectivity of the political person, De Freitas. And since he is potentially influencing the independence and objectivity of someone else, this becomes a violation of Standard 1B, and therefore the best answer is A, Myers should refrain from donating to De Freitas. Next, we move to Standard 1C, misrepresentation. Lee is a financial planner for AKC. AKC compensates its planners based on the number of AKC products they sell. Lee advises a married couple to transfer their retirement funds totaling $125,000 to a single AKC investment fund that follows a large cap equity strategy. Lee discloses to the couple that they will have to pay a penalty totaling 30,000 for closing their retirement accounts, but claims they will make up the losses with better investment returns from the AKC product. Lee's actions are A, acceptable if the AKC product is suitable for the couple, B, a violation of the CFA Institute Code and Standards because she is promising a specific rate of return, and C, acceptable because she fully discloses the negative consequences of closing their retirement accounts. So think about this. Now, it might appear that Lee is not explicitly promising a return, but implicitly what she is saying is that by bringing funds over, you will need to pay a penalty of 30,000. And this penalty of 30,000, however, she claims will be made up. So indirectly, she is promising that the return will be at least 30,000 divided by 125,000. So this is what she is claiming. And that is very problematic given that we are talking about an equity strategy. Equity strategies by definition are somewhat volatile because stock prices can go up and down. It is quite possible that stock prices do go down. So making a claim that the losses will be covered is a problem. This is misrepresentation, and therefore it is a violation. The best answer then becomes B. It is a violation of the CFA Institute Code and Standards because she is promising a specific rate of return. The next mini case also has to do with 1C, misrepresentation. Anderson is the CEO of an asset management firm. He makes an in-person proposal to manage the investments of a large pension plan. In response to a request from the pension plan, Anderson provides a list of the key personnel who would manage the account. While waiting for the outcome of the evaluation, one of the key personnel that Anderson identified and who was part of the team that made the in-person presentation leaves the firm. Anderson should A, do nothing because the pension plan is hiring the firm, not an individual. Immediately inform the pension plan that one of the key personnel has left the firm. C, hire a competent replacement for the person who left, and then inform the pension plan of the change. So here, need to keep in mind that the key team or the key personnel is very important to the client. If Anderson does not tell the client that this key person has left, then that is misrepresentation by omission. Therefore, the most appropriate course of action is that Anderson should immediately inform the pension plan that one of the key personnel has left the firm. This case is also related to 1C, misrepresentation. Bordeaux is CEO of Latour, a global company that makes electric cars. Recent media reports mention that the company is having difficulty in producing and delivering its cars to buyers. In response to these reports, Bordeaux posts on his social media that the company is considering taking Latour private at $420 a share. Funding is secure. Previously, Bordeaux had met with a large sovereign wealth fund that expressed interest in investing in the company and taking it private, but they had not reached any agreement or determined a share purchase price. After the post, Latour's stock price increased more than 6% and closed at $380 per share. When asked about the specific stock price in the post, Bordeaux acknowledged that he had not discussed pricing with any potential investor but chose the price as a joke. Bordeaux's actions are A. Inappropriate because the post was a misrepresentation of the facts. B. Inappropriate because not all investors use social media. So Bordeaux is selectively disclosing information and putting some investors at a disadvantage. And C. Appropriate because his post said only that he was considering taking the company private and thus contained only speculative, non-material information. Okay, so now notice that in his post, he is saying that funding is secure and he gives a price. So it is natural that those who will see this post will then anchor a price of 420 in their heads. So this is quite clearly misrepresentation. Therefore, the last option, which suggests that this is an appropriate action, cannot possibly be correct. Then with respect to A, where the option says inappropriate because of misrepresentation, and B, which says inappropriate because not all investors use social media. Here, the much better response is A, because clearly misrepresentation is happening. With respect to social media, in today's age, social media is generally considered pervasive, and therefore, between A and B, A is the better option. This case has to do with 1D, misconduct. Hanse is a portfolio manager employed by a global investment bank. She manages an ESG investment fund. In her free time, Hanse participates in civil disobedience demonstrations to protest climate breakdown, biodiversity loss, and ecological collapse. At several demonstrations held in the financial district, Hanse is arrested on charges of unlawful assembly, obstructing public transit, and disorderly conduct. She is ultimately convicted of several minor criminal offences. Hanse has signed a standard employment contract with the bank that allows it to terminate any employee who is convicted of a criminal offence. Under the CFA Institute Code and Standards, Hanse's actions A. do not violate the code and standards, B. violate the code and standards because she has violated her employment contract with the bank, and C. violate the code and standards because she is arrested for misconduct in the financial district. Now here we should keep in mind that the acts of civil disobedience by Hanse reflect her personal beliefs. They do not reflect adversely on her professional reputation, integrity, or competence. Therefore, these actions do not violate the code and standards. This case also has to do with 1D, misconduct. Mang is an investment advisor for a regional bank that serves many high net worth individuals. As per the bank's policies, if an advisor forgets to send an order to the trading desk, a 30-day error correction period is permitted. To rectify the error, the advisor is allowed to buy or sell a security at the current market price. The price differential is charged to the advisor personally through an internal error account. Mang frequently uses the trade error correction policy to benefit clients who are unhappy with their account's performance. He identifies a security whose price has increased in the past 30 days and tells the trade desk he mistakenly failed to buy the particular security. Once the request is approved, the trade desk purchases the security and charges the price differential to Mang personally through the error account. Shortly after that trade, Mang sells the security. Mang's actions A. violate the CFA Institute Code and Standards, B. are appropriate because Mang is acting for the benefit of the client, and C. are appropriate because the bank is not harmed by Mang's actions. So now here we should keep in mind that Mang is indeed engaging in misleading, fraudulent, and deceptive practice. Therefore, he is clearly violating the code and standards. So the best option is A.